Hi guys, welcome back to the channel. If you are new to the channel, please consider subscribing so that you get notified of future videos. Like this video to motivate me to continue sharing the knowledge, my experiences in forex trading, making money and things like that. If you are looking for forex robots, indicators, systems and strategies, things like that, uh, there are two blogs in the description box below. Just visit the two blogs and you definitely find anything that you might be looking from there. If you don't find anything that you were looking for, then you can always come back and leave a comment in the comments box below. But usually people just come and request stuff that's already on the blog, so go through the pages on those blogs. You will definitely find what you are looking for. In any case, let's get into today's video. So there is a common misconception in forex trading, that retail traders don't stand a chance against institutional traders, against the hedge funds, the big banks, the big guys, the big dogs. In a way, it's true. In a way, it's true, because the institutional traders, you cannot argue that they've got bigger capital to trade with, which means they can also, for example, negotiate for lower fees, lower spreads, interest, and the brokers usually try to give them better services and a wide range of products, and they've got an information advantage. You cannot argue with things like that. They've got an information advantage. Those guys, they use services like Bloomberg, and which cost a lot of money for an average trader to subscribe to. So before the news hit the markets, usually the institutional traders already know those news because of technology and because of their access to the news and technology. Those guys, the hedge funds, the banks, the institutional traders, they have access to PhDs, PhDs in economics, physics, and other fields, computer technologies, and stuff like that. Those guys have an advantage on their side. So definitely, the institutional traders have an edge over retail traders. But to say that retail traders are always at a disadvantage will be telling a lie. There are areas where retail traders actually have an edge over institutional traders and can actually outplay them in the market. For example, in terms of fast information, if you notice, many of these institutions, they try to get a direct link to, for example, markets like Wall Street. Many of them, they are situated or located closer to Wall Street, or they have technologies that allow them direct access to Wall Street and what's happening there without a lag in time. So they kind of have a real-time feed of what's happening at Wall Street, whereas you are depending on your broker. The information first has to go to the broker, then the broker has to display it on your charts, and then you have to look at it and process it and things like that. So they kind of have an advantage because of their technology and because they have access to fast information. But that is only an advantage when you are trading the 1 minute chart, when you are trading the lower time frames. If you are trading 5 minute, if you're trading 1 minute chart, especially the 1 minute chart, because there you cannot outplay those guys. They are using robots and things like that. Google high frequency trading, HFTs. It's like milliseconds, micro milliseconds. They are getting into trades and out of trades in the blink of an eye. So in that case, you cannot compete with them on lower time frames. But where you can actually outplay them is higher time frames. Let's get into some of the areas where you actually have advantages over institutional traders. Where retail traders, you are actually at an advantage over retail traders. So first of all is capacity. Because the hedge funds, the banks, and the institutional traders actually have big capital, it's actually a disadvantage for them. Why is it a disadvantage for them, and why is it an advantage for you with your small? I don't know how you classify small. Some will say $100 account, some will say $500, some will say 1,000, some will say 10,000, some will say $100,000 account is small. So how do you compete with those $1 billion accounts or the $100 million accounts when you are just trading with a $100 account? We said capacity. How is this an advantage? The problem is for the big banks and the hedge funds and the institutions is they have so much capital and they cannot just pour all of it into the market all at once, because everyone then will see what's going on. You get the point? Everyone will suddenly see that $1 billion is just gone into the market, because then there'll be a spike or there will be a huge candle move. So by pouring a huge capital, then they make their presence known at a particular position and everyone will jump in into the market. If they were to pour in all their resources into the market at once, price would move so fast that they would make a loss. Will make a loss because they'll have to buy stuff or sell stuff at a price that they were not planning, because price moved so fast. So that's an advantage for small traders, that you can just fly under the radar and just go with the flow, and no, because you can't move the market, nobody even notices you. Then the other thing is retail traders have an advantage of being able to trade exotic markets. For example, things like cryptocurrency and stocks in developing markets and derivatives. They call them derivatives, yes. Things like boom and crash and things like that. The big traders at the big banks, at institutions and things like that, they cannot just go into those things like that because they are unregulated, and there is sort of a red tape against them getting into things like that. So they can only trade futures, forex, and stocks. But things like cryptocurrencies and things like boom and crash and things like that, they rarely participate in those things because they are usually unregulated in the major markets. So as a retail trader, you've got an advantage in that. If forex trading is not working for you, how about trading cryptos? If cryptos don't work for you, how about these derivatives, boom and crash, step index, and things like that, where the institutions and hedge funds cannot get in? The other advantage that you actually have over institutional traders is you've got no pressure. Retail traders actually can decide not to trade for a day, for a week, for a month, for a year. The problem with big hedge funds and banks and institutions is they must trade, because they are handling people's money. The people that gave them the money to trade with are expecting them to trade every day, every hour of the day, because it's about making money. So they want to make money. So that's an advantage that you have, because whereas the institutional traders and hedge fund traders have got pressure to make money, they've got pressure to make money every day, which means sometimes they make mistakes. You as a retail trader, you've got no pressure at all. If there's nothing in the market for you to trade, you can simply just ignore the day, ignore the week, and nobody comes after you. uh, which the institutional traders cannot do. They have to deploy their capital, because they have to make trades, they have to make money, and their investors are expecting them to make money. Then you also know that the institutional traders and hedge funds and big banks usually are required by law to actually disclose information on their holdings. uh, I think it's called COT or something like that, which makes it more difficult for them to outmaneuver the market, because the information is now public that this bank is holding so much in Euro USD, or holding so much in GBP USD, or holding so much in gold, which means then everyone who's paying attention to that information, everyone who's paying attention to that information can simply use that information to outmaneuver the hedge funds and the big banks and stuff. And retail traders have been known to do that. I think it's called COT or something like that. I think Google it. There are actually strategies that have been developed around it, where yeah, people just determine positions according to information that has been provided by the banks and the hedge funds and institutions about their holdings, or in gold, in dollars, in euros, and things like that. So retail traders, they don't need to disclose any such information to anybody. So yeah, I thought let me just clear the air that of course the big players, the institutional traders, the hedge funds, the big banks, they might move the market. They are the Goliaths of the market. They have got huge capital and they have technology on their side. They've got fast access to information on their side. But it doesn't always mean that the retail trader is always on the losing side. The retail trader actually has many areas where they've got advantages over the big banks, and if you use that information well, you might actually make a lot of money in forex trading. Like this video, leave a comment in the comments box below, subscribe if you are not yet subscribed. Until next time, bye.